Hey traders, welcome to a crypto market update. We got a few news stories that we're going to talk about today, and then we're going to jump right into the charts looking at BTC, Ethereum, Total 2, and we'll take a few other alts, kind of anything that someone wants to be reviewed or analyzed or just taking a second look. We'll definitely take a look at a bunch of different alts a little bit later in the video. But first off, we're going to start with this article. Canada's central bank is serious about designing a central bank digital currency, a CBDC, job posting reveals. We're not going to get extremely into it, but after years of research, the Bank of Canada is preparing to design its own central bank digital currency. And the plan, it reveals its plan on a job posting that was posted on June 11th. And it says, the Bank of Canada is embarking on a program of major social significance to design a contingent system for a CBDC, which can be thought of as a banknote, but in a digital form. So we see how it goes. China also is pushing for a digital currency that they're trying to create as well. So it's kind of a race to see which monetary system will shift the quickest in terms of the countries that are actually attempting to push this forward. Another note, we already talked about this a little bit within the global macro scale, but this does also come to the realm of Bitcoin, obviously, with worries of inflation. Limitless Bailouts, US Federal Reserve announces $1 billion corporate bond purchase program. So they already said that they're purchasing ETFs, so junk bond ETFs, and now they're really purchasing really anything. We can see right here, the American public recently witnessed the Fed's announcement on Monday, which explained the central bank will be buying individual corporate bonds on a regular basis. So before they were doing the large group, which is an ETF, so it's a bunch of different bonds put together, and this now is actually purchasing single corporation bonds. So reducing the risk of bullish risk-on investors even more, basically. So they're trying to create a system in which there's no risk, there's only upside, there's only expansion, there's never contraction, and they're willing to go to extreme lengths in order to try to make this happen. We also see within EU and Britain, the British or Bank of England, BOE, has printed $125 billion, and we can see that the EU also, right here, European Central Bank, is already created a bond buying program by $680 billion worth. So it's definitely pretty crazy, and we can see that this is a huge discrepancy between the people who want it versus don't. The BBC Bank's 9-member governing council voted 8-1 to increase the size of its bond buying program. So basically everyone wants to try to stimulate the economy, try to expand the balance sheet, and print a lot more money. So it's not just the US, it's on a global scale. And on a side note, GBP, the currency of England, took a really big dive recently, probably because they printed a lot of money, which is kind of weird because when the EU printed a lot of money, they actually saw a huge gain. The Euro-USD pair shot up quite aggressively after Europe or the EU kind of welcomed that new stimulus package, and it's kind of weird that this is going to go down. But that's the markets. It's never going to be a guarantee. Next thing I'm going to switch to is definitely more crypto related. We see that Singapore carpooling app Ride launches wallet for BTC payments. And we're not going to get into this. Basically, it's like Uber or Lyft of Singapore. And they've integrated BTC wallets in order to transact Bitcoin for rides, basically. And although this does sound great right now, it's probably not a good thing for everyday people who just want to use Bitcoin to get a ride, because we can see that the transaction cost is quite high. At a peak, let's say around May 20th-ish, it costed over $6.50 in order to transact any real amount of BTC. And if we go back a ways, we can see that it was, let's just do all time. At the peak, it was at like $54 or $53 or something. So if you look at the scalability, and if there's a ton of transaction volume coming in and we're getting massive price appreciation, it's not really going to be usable in terms of small payments, micropayments. If you're spending $3 on a coffee, $10 on a car ride, you're not wanting to spend another $6 on the transaction fee. And this is where the Lightning Network may come into play. We're not going to go too far into it. It's a rabbit hole within itself if you'd like to learn more, but we're going to read this little blurb just so we have a good understanding, or a quick understanding of what it is. So, known as Bitcoin's second layer because most of the action takes place off the blockchain, Lightning is being built out faster, cheaper, and more scalable Bitcoin payments. The network is functional today, but it turns out it might make sense to strip out an important part and replace it with new technology to strengthen privacy. So a lot of people are talking about the Lightning Network creating more scalability in BTC, which would be great. And that would solve a lot of the issues that we see with the transaction cost in order to actually get it into a currency that people can transact with for micropayments and small one-time payments like a coffee, or you're getting an apple, or you're purchasing a small item or getting a ride. So that's the fundamental side of the day. We're now going to get into the charts here. We're going to take a quick look at the equities market, and we're actually before we get into the charts, we're going to get a good understanding of the two correlations that we have. One with the equities market, and then the other one is going to be with gold, because obviously gold is a safe haven asset. And it's been like that for thousands and thousands of years. So let's quickly get our gold chart right here. And we're first going to look at the S&P 500. So let's get this on the screen. This is the 90 days, so it's going to be collecting the last 90 days worth of data, and going to be seeing that there is less correlation than we had back in, let's say, May, early May. We had the highest point of correlation recently at 0.35, positive 0.35 correlated, and now we're dropping quite substantially at around 0.18. But overall, we're still seeing a positive correlation between the S&P and BTC. If you're looking at 180 days, not nearly as significant of a positive correlation, but we still see it's in the positives at around, let's just see here, around let's say 0.2, 0.19 positively correlated between the S&P and BTC. So there is some level of positive correlation when you are looking at the 90-day and 180-day time frame, which is not extreme. It's not highly correlated, but it still does have some correlated properties, because in my opinion, it's looked at as a risk-on asset. You're not wanting to be putting your money in BTC when the equities market is absolutely plummeting. I don't think that's going to be a place to hold wealth in that moment in time. Over, let's say, years, I definitely think that BTC is going to outperform the S&P for sure, but we're talking like just shorter term time frames. And this is BTC compared with gold, and we can see slightly negatively correlated, but basically there's no real correlation on the 180-day chart. And when we jump to a smaller time frame like the 90-day, there's actually some level of negative correlation, around negative 0.12, around there. And that's not extremely negatively correlated, but there is still some negative correlation. So just looking at the data, we can assume that at this point in time, BTC and overall crypto market is more of a risk-on sentiment asset class compared to a risk-off. Now, I do think in the long term, BTC will be shifting from a risk-on to a risk-off, because if there is worry of monetary uncertainty, inflation, people will most likely turn to BTC, because when we're looking at places like Venezuela, Argentina, we see the BTC transaction volume skyrocket, absolutely explode when there is inflation, hyperinflation, especially in Venezuela. You see a huge wave come into crypto, which is very promising. But right now, I still view it as a risk on assets. So we're going to be looking at the S&P first to get an understanding of where the S&P is. So then we have a good understanding of where crypto could go from here. So let's just zoom back a little bit so we can get the pre-COVID situation right here. got the massive sell-off, and we got the big rally, and then this 61.8 zone right around here is a very important level for me, at least, that I'm trying to understand. Is it going to pass or not? In my opinion, as of right now, the path of least resistance would be from this consolidation zone back to this key level 61.8 from top to bottom, and then the retracement is 61.8. That's where I got the key level from. And we can also see support, resistance, 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 resistance. It broke through, retested, and then it absolutely rocketed from there. And definitely I can see that if it does come back here, we're going to get a decent amount of buy pressure. There's going to be some level of demand, but in terms of the path of least resistance, we have a high, a lower high, and even within the little structure right there, let's just zoom in, we do have a series of lower highs pushing the price down, and we have a little squeeze where we got a little symmetrical triangle that was funneling the volatility into the apex, pushed down, retested, and now we're creating a smaller descending triangle. So we'll get into the smaller time frames right there, but in terms of the path of least resistance, I definitely think that around the $3,100 zone is a current minor level of support. If we do break below that, would not be surprised if we do inevitably hit the 2970, 2980 mark, which is going to be a major level of demand. I don't want to assume that it's going to break that zone. That's going to be where we have to assess the situation, look at the wicks, look at how it's reacting, look at and see if there is injections of buy pressure coming into the market on larger time frame candles. So that's going to be a later point to assess, but right now let's just jump into the hour chart and take a snip and then discuss what we can see on the hour chart, and then we'll go to BTC soon after. So I'm just going to get the thick point. So we got our first anchor point right here. We got more rejections with type A's and type B's. Another rejection point, another rejection point. So we got a descending trend line connecting the lower highs there, and then I was looking at this zone. Initial resistance turned support, 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 which was pretty well respected. So then we were squeezing between a key level of resistance and an ascending zone of support. I did know that we did have a minor level right here. So now we're going to be looking at this from a symmetrical triangle that broke to the downside. The final target, just looking at the size of the triangle, would be around here in confluence with some of the key levels indicated in the historical charts. But it did get halted by the buyers holding this minor level of support. We can see that right here. And now we're getting a descending triangle. So it went from a symmetrical triangle to now a descending triangle. We can see that right here. So now let's just take apart the rest of that. We got a high, lower high, a lower high, lower high, lower high, connecting the lower highs, creating a descending trend line. And then we see that there is a support held multiple times. And we just draw in a trend line or a horizontal zone there. And now we got our nice descending zone, which is contracting the price action movement and volatility. Usually when there is a contraction phase, there's going to be some level of expansion, increasing in volatility, and that's what we're looking for. Ideally, it would be volatility to the downside. That's going to be my bias. When we do our risk on, risk off sentiment analysis, that is what we're trying to identify, and we did it yesterday. If you want to check out that video, you definitely can. But in terms of the S&P right now, just looks like it's going deeper into the funnel towards the apex, and we're just basically reactionary trading, seeing which way it's going to break. If we do break to the upside, I am still going to be looking at this descending zone right here. So if this initial zone breaks, I still will be looking at the larger exterior trend line right here, because it could just come in here and then continue its descent. So I'm not going to be looking for longs just yet. I'd want to see the price break this zone and even this horizontal zone if we do get some level of confluence where we have rejections at that area. So that's going to be my long opportunity, although I am a little bit more short bias, which means that I want to ideally see this trend line hold the price lower and then break of this support zone where you get some level of retest validating this previous support zone as a new level of resistance before pushing the momentum back to the downside. And I think that would, in my opinion, be enough to push it at least to the range that we were looking at there, if not to the major zone of around 2970 to 2960, 2980, somewhere around there. So that's my view of the S&P. Let's now go to BTC because that's really all we're going to talk about in terms of non-crypto related markets. But one thing to note, look how similar these charts look. For me, they look extremely similar. So I'm just going to take a picture here. We can see huge sell-off, huge sell-off, huge sell-off, and then you get a bull rally into another sell-off, bull rally into another sell-off. You hold a strong level of support, hold a strong level of support. You get a push breaking the previous high right here. That's not a straight line, but there's that previous key level of resistance, and it went through it, so it made a higher high. Same here, the S&P was a lot more aggressive than the higher high, but we do see that previous high was broken to the upside, and then now we're consolidating and not really making any headway to the upside, and we have a series of lower highs within the consolidation on both assets, and we're just consolidating slowly, making a move to the downside. You could have just drawn in a little ascending support there as well, which then would have created your symmetrical triangle right here. Broke to the downside, retesting this zone, and now we're in a nice triangle formation right around here. If I can get my, there we go. There we go. So that's what I currently see right now. So very, very similar in terms of structure. So I'm assuming that they're going to go the same way. I really don't think the S&P is just going to absolutely skyrocket and BTC is going to dump, or vice versa. I just do not think that's going to happen. So that's something to consider. You got to look at both assets. You got to look at other stuff other than just the S&P. We're looking at oil, bonds, metals, FX, all that stuff. So definitely a little bit more of a risk-off sentiment at this point in time, meaning that global investors are not super risk tolerant. So they're going to be looking for safer investments, and I don't think BTC is, in my opinion, considered a stable, safe investment as of now. I consider it an extremely, not speculative, it's extremely volatile piece of real estate that you can get digitally. That's the way I look at it. It's not a currency yet. It is a store of value. There's a finite amount of it. It's like digital real estate. That's the way I view BTC. Accumulate, don't spend it. And that's the way I like to kind of operate my crypto holdings in terms of long-term investments. But anyways, very similar in terms of the S&P, and we already talked about that, but let's just talk about the full. Actually, no, let's go to the daily chart because that's obviously very important. And I'm going to stick this to the 2 hour, and then we're going to go to our daily chart. And we can see that right here. Let's get our little snip and discuss this daily. So we already talked about this major level of supply. Lots of sell pressure at this zone. We see a series of lower highs. That's not great. We see huge dumps to the downside, and yes, we did get a big rejection from the buyers with the long wick to the downside here, where you get an open, you get the price to come all the way down, but then the buyers pushed it right back up and it actually closed above the open. That was pretty bullish, I must admit, but overall in terms of the structure, it's not looking fantastic. That's what I currently see, is I'm looking at this zone, this support, and where the wick touched that support, you just connect the dots, and then you have your ascending trend line, and then you have your series of lower highs, which is then squeezing the price towards the apex, which is probably going to be somewhere around there. And that's basically all I see in terms of structure on the daily chart. We do know that there's a lot of buying below the $9,300 zone, and this $9,300 zone is our main level of support. We see that it's held since late May. There has been periods where we've been trading below the range, but overall on the daily, we see that it's been closing really, really well. So this is now the consolidation structure that I see, is a descending triangle pattern where you're holding a very important level. This is going to be the 9,300-ish level, and then you're looking at this one, which is the 8,500 level. So these are the two biggest zones that I currently see within the structure. If it breaks the $9,300 zone, I think it's going to be a pretty quick move until the 85. And then if 85 goes and we go trade below it, we're going to be looking for some level of continuation pattern, whether it be a wedge, whether it be a channel, whether it be an ascending triangle, whether it even be a descending triangle. It doesn't really matter. It could even be a melting down wedge where you trade, go break below the support, retest, and then move to the downside. It could be any of those. But what we're going to be looking for is continuation patterns to the downside once it breaks below this major 8,500 zone. So that's going to be the look on the daily. This is the 6-hour chart, very similar. We did get the candle closure. I think this is the wick on the 12. No, not even. So it's only the daily that there's a big wick here. So every other time frame under that, you see the candle close below the $9,300 zone. It'd be nice to see it just as a wick because then it validates it even more. But what are you going to do? It's not going to be perfect every single time. So, my opinion, the current path of least resistance would definitely be a potential break because we've already invalidated this support. If you had stop losses here, they're already taken out. So a lot of buyers are already out of the market. You did get a lot of dip buying when the price did fall below this zone. You could say that there's a descending wedge forming where you have a resistance turn support, and then you got that little descending zone there. So if you're looking at it at that sense, and then you got your support zone there, I think the path of least resistance would be to get a little dump to the downside, and then you have a confluence zone where you're probably going to get some level of buy pressure, where you're getting this descending zone and this ascending zone to come at a central point right here. So that's going to be the next high probable situation that the price is going to be at, in my view. And that is, in my opinion, in line with the overall S&P, because we did look at the S&P and how the path of least resistance would be a fall from where its current consolidation is to around 2960, and then for BTC, it's the current consolidation to around just under 9K, and then ideally in a, maybe not a perfect world, but if we are looking for shorts and short exposure, if we think that the S&P overall risk on sentiment is now shifting to a risk off where it's kind of overhyped, there's euphoria, you know, if you're looking for short opportunities, I think the second highest probable situation would be looking for entries here on the higher half, right around there. And then if you're wanting a little bit more of a dependable setup, that's when you would be looking for that $8,500 level right there. That's the most the highest dependability setup in terms of where you're looking for potential continuation patterns to the downside. If you're looking pre-8,500, we've seen that this $8,500 zone has been a major structural support. Here as well. So you do have to take that into consideration. You could scale in, so you could put like 25%, 50% or whatever before 85, and once it cracks 85, you could size in. That's just a couple options that you could have. Obviously, you should backtest before you just completely change your strategy, but overall, that's the potential outcome is we're going to have some level, I think, of a consolidation. I think I will put this trend line here, just because it's pretty well respected. And there we go. And I'm going to get a little projection zone. Actually, I'm just going to bring this up all the way because that's a very well respected zone all throughout the chart. So we got a nice wedge. I think that it'll go down before it'll even start to come up. But in terms of the overall respectedness, I guess you could say, of the pattern, it's pretty well respected. All right, so we got that zone there. I think the highest probability, like I said again, is going to go to the downside where we have that zone of confluence, and that we're on the 6-hour chart, so that could take a little bit of a long time. And the only thing that would make me change my mind is if we break this zone right around here. So if we are able to hold the $9,300 zone, break above the 9,550 horizontal level of resistance that we can see right here, and then consolidate above this zone on the 1 hour, 2 hour, that is when I might have to shift my mind and potentially look at it in a different way, because this descending wedge is breaking to the upside. Don't know how strong it is, because we do have a major level that we have to work with in terms of the key level of supply right around here. But it is a pretty well respected zone nonetheless. So I'm just going to change that color a little bit. And that's what I currently see in the market. Nothing crazy, nothing too overwhelming, but I think that's going to be the next possible move. So I do have some positions in the markets in order to try to capitalize on the risk-off sentiment opportunity. And then this is the 2-hour chart. Nothing really to talk about that we already haven't discussed on a smaller time frame. I will incorporate our trend line that we got on the 6-hour as well, just live with everyone. And then we're going to go on to Ethereum. But before that, we're just going to check the comments to see if anyone has any alts that we would, or that they would like us to look at, just for fun purposes sake. If you have a favorite alt that you're looking at, we'll definitely take a look at it, take a look at some relative strength compared to some of the other alts that could be better. Link is pretty strong in terms of relative strength compared to a lot of other alts. BNB does pretty well, and we'll take a look at some of those later in the video. So that's going to be the 2-hour draw, and we'll see where it goes. I think that's going to be the highest probable situation in my personal view. So if you're looking at it from a risk-reward perspective, you'd need to basically be in at this point in order for it to be worth it at all, in my personal belief. But that's just me. I take minimum 2-to-1 risk-reward. I don't like anything underneath that. But that is the overall analysis for BTC. Actually, what we're going to do is go over the BTC dominance as well, which is this big guy right here. Mainly just looking at this on the large time frames. We haven't seen much of a change because mainly all of the coins have been in consolidation, or a lot of them have been in consolidation at least, right at the key level of support. And like we've been saying, if the entire crypto market takes a dump and moves to the downside, the Bitcoin dominance will increase, because like in equities, if you have a bearish sentiment market, people are going to be putting their capital in places that hold value better than other places in that same market. So BTC is the best for holding value long-term in the crypto market. And that's just a fact looking at numbers. So if this goes up, this is a very tight squeeze we're seeing here with this ascending zone and this descending zone squeezing the price closer together. We're really right at the apex zone. Yes, it could consolidate a little bit more, but I'm waiting to see what it does, because I don't want to be full out on alts yet, because if this does break to the upside, we could be getting a really good price for really solid projects like Ethereum. I really do love Ethereum, so if we're able to get it like under 150 or even under $100, that's an absolute steal in terms of US dollars in exchange for Ether, in my personal view. So we'll see where it goes. It's really not been doing anything, so there's not a whole lot to talk about other than this squeeze that is occurring. Quick look at the inverted charts. So this is going to be looking at if, up is down, down is up, basically. And we like to gain perspective by using this chart. And let's just take a picture and quickly talk about this bottoming. Actually, we'll look at the bottoming prior as well. So we'll go to the 6-hour and look at the previous bottoming. These bottoms I absolutely love. Gold had this bottom for 5 years, this massive long drawn out bottom. BTC also had this bottom between 2018 and 2019. And the bottom basically structure is you have a horizontal level of resistance. The price, well, not initially. Let's just talk about price action. You get a massive sell-off, and then you get the price to like bottom out. You get a series of lower lows, and then a base, and then some higher lows, and then you get a horizontal zone that is very well respected with a nice bottoming pattern like here. And once it breaks this major structural resistance zone, you're looking for continuation patterns here before the big move up. You saw this, let's actually look at it right now. First, let's look at BTC, because BTC had it right here. Let's just zoom out a little bit. Right here. How perfect is that, right? That's the first bottoming pattern right there, right? Lower lows, held a low, held these lows here, and then you started seeing higher lows. Very nice bottoming pattern. And then you could draw your ascending wedge melt up. Like so. So that's going to be the structure that is a potential bottom opportunity. Let's also look at gold. Gold did a very similar thing. Let's go here on the daily. And it's probably going to be easier on like the weekly. Yeah, there we go. Okay, so this is the gold's bottom. Very similar, where you saw low, lower low, lower low, lower low, and then you saw the low kind of end, and then you see this nice low bottoming pattern with a very structured ceiling. Once it breaks the ceiling, you have this very nice wedge, ascending channel, whatever you want to call it. Huge move after that. That's what we're looking for. That is, in my opinion, absolutely the exact epitome of a great bottom continuation pattern entry structure that we're looking for. So with that said, let's just quickly go back to looking at that chart and then looking at this chart. Another one we're going to be looking at is this reversal right here. This guy right here, that was on February, but then on the inverted chart, so then we can see it as a bottom. Similar thing, right? Where you got a nice rounding bottom and a very significant previous support, turn, resistance, 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 resistance. Key level, you get a series of lower lows, and you get this nice bottoming pattern, and then you have a very well-respected wedge. Boom. Massive move. And that's what we're looking for, right? So now taking into account what we're looking for in terms of a bottom, let's look at the current price action and try to understand where we currently are. Because if it does follow this bottoming structure, very high probability setup that it's going to move further to the upside. So where is the breakout zone? In my opinion, like I said, 85. This is going to be the breakout zone. And then we see a series of lower lows. It's looking pretty favorable. And then you see first touch, second touch, third touch, holding an ascending zone right here. If it's able to break here, that is an awesome potential. And then you're looking for something here, kind of like this. Could be ascending, it could be descending, it could be a wedge, it could be a wedge, whatever it is, you're looking for continuation pattern at that point in time. And that's what I'm looking for on the larger time frames for short opportunity. I think it's a little too early as of now, and I think once we pass this 85, there will hopefully be a continuation pattern that I'm able to enter in, because I think that's going to be the move to take if we are looking for any shorts as of now, if you are looking for swing trading. And I said for day trading, path of least resistance is to the downside. It's a small day trade on the 1 hour chart, but in terms of the next big, large move that could be coming in, I think that could be a big potential move to the upside, which would be obviously very bearish for BTC. So, quick look now at Ethereum. I haven't really been loving Ethereum too much. I'm just going to quickly open up the questions here to see if I have any questions. Don't think I do. But before we get into the alts, I'm going to take a real quick look at the questions on TikTok, and then we'll jump right into Ethereum. Total 2, which is the market cap of crypto, excluding Bitcoin. And then what we'll do is take any alts that are thrown in the comments, look at them, do some relative strength analysis to get a good idea of what alts may be relatively strong or relatively weak, which is a good indicator of potential performance in the future. Obviously, it's not indicative, it's not a guarantee, but usually trends have a way of going for longer than you expect them to. So, okay. Quick question here on DSE bid. What do you think about all this money printing? Where are we going? Well, I think the inevitable destination is inflation and potentially even hyperinflation, which means that central banks will have to raise interest rates substantially, kind of like what they did in the 70s. And in a similar time frame, what happened to assets that have a fixed supply, like gold? They shot up astronomically. Silver shot up astronomically. All metals did. Well, not every single one, but most metals did. And I think that's the inevitable destination for the current market conditions. And I think a lot of people know that, but the huge question is, how long is it going to take in order for us to get to the point where global investors do not have faith in the current currency system? Looking at Japanese yen, US dollar, they've printed a lot, not just those two. Euros printed a lot, Bank of England printed a lot. But in terms of the whole currency system, how long can it go? And governments are already creating central bank digital currencies, but in terms of the actual system we have right now, it's inevitable that it's doomed, in my personal belief. But there's a lot of theories that could play out before the downfall of the US dollar. Let's just talk about the US dollar for now. One theory or hypothesis would be a dollar milkshake theory, which is basically, in short, there is a lot of US debt in the world, not in the United States, from corporations and countries, and in order to pay off that debt, you need to purchase the US dollar, you need to purchase whatever indebted asset you have and pay it off, obviously, or else it'll just incur the interest forever. And because of the size of the debt globally, there is a potential for a dollar short squeeze, meaning that in order to get rid of the short position, you need to buy the dollar. If a lot of people are buying the dollar in order to pay off the debt, that's going to strengthen the dollar. And as the dollar strengthens, if your native currency is weaker than the dollar, you are incurring more debt without even borrowing more. So then people will try to pay off the debt sooner, which will then create more demand. And it's a cycle that could lead to a very dangerous road for emerging markets. We'll see how it goes. Look at dollar milkshake theory, but that's one inevitable pathway that we could lead down, is just major dollar strength. And then when everyone is one-sided on the dollar, then the epitome of monetary policy and just money printing comes into fruition. Devaluation and debasement of currency will lead people into safe haven assets like gold and Bitcoin and other metals and stuff. So that's my personal view. I have no idea how long it's going to take. We have to take it little by little. I can't really exactly say, but that's my view on it. All right, my best site, invest trading, good bot starts just. I do not know what you're talking about. I just joined. What's happening? We're just talking about crypto markets. We're going to be looking at alts shortly, looking at market cap of alts, excluding BTC, and looking at some single alts like Ethereum, or if you want to look at XRP, Ripple, we want to look at Chainlink, Link, BNB, Binance Coin, all that stuff. All right, so Virtual Bacon, what's up? Lebanon too, yeah, exactly. So it's actually interesting to see the transactional volume that takes place during massive inflationary periods in different economies. Like, we looked at Argentina and Venezuela. People rushed into cryptocurrencies. The transaction volume of BTC exponentially increased when there was CPI numbers increasing, meaning the cost of goods and services were increasing substantially. You're losing value. Like, you have $100 today, you could buy maybe half as much as what you could yesterday as you can now today. That kind of makes sense. It's not a good thing. So it's happening all over the world. It's not impossible. It seems like it's impossible because the US dollar has been the world reserve currency for over 100 years, since the Federal Reserve was created in 1913. There has been some issues in the past where they've been taken off the gold standard, and now we're at a point where it's just, how much confidence can the global investor take before they understand that, holy shit, they just increased the total amount of currency in the pool by like 16%. or 12% in 3 months. That is extremely unsustainable. That's inflation numbers easy. If we continue. So that's my personal belief. But you do have to consider the fact that we are seeing a massive decrease in velocity of currency, which is going to make it difficult to attain any sort of inflation, as well as the demographics that do play into places like United States, especially Japan. Japan's the worst of it because their demographic pyramid is extremely skewed for the older demographic to be outweighed and outnumbered compared to the younger working age population, which is extremely deflationary, and the velocity of currency dropping is deflationary as well. So there's a battle here, right? A lot of people think inflation, but there is an argument for deflation first, right? It kind of makes sense, but that's for us to look at kind of day by day. I'm not going to make an absolute prediction saying this is exactly what's going to happen. I like to look at the charts, be reactionary, and think about what's happening in the markets every day and construct a hypothesis and a thesis for our swing trades. All right, so let's continue on here. Thank you for the panda. I still do not know what I can do with those. Sin sent Bravo, thank you very much. Glad to see you here. All right, please can you check out TFUEL BTC and SNGL BTC? Yeah, sure. So let's actually do that right now before we jump into Ethereum. Also, for the people watching on YouTube, we are going through a bunch of different alts. Both we're going to be doing relative strength as well as just looking at it paired with USDT. So the first one you wanted to do is TFUEL, and let's initially look at the chart on the daily against USDT, so against United States dollar or tether, whatever you want to call it. Massive spikes. Does not seem like it has a lot of, I guess it seems to have a lot of liquidity. It's just these massive booms to the upside. Pretty crazy chart though. Wow, you got a nice support at 60.94. Now you're creating a minor. Kind of looks like a mini version of it. If you get the bars pattern, go like this, and then shrink it down quite a bit, like this. Kind of like that. So I think I'm going to die off for the next little bit here, but when it's seeing elevated R-vol, which is relative volume, you're getting massive spikes. So I personally wouldn't want to trade it, but interesting. Let's compare it with BTC. Wow. Let's go to the weekly. Wow. That's crazy, man. It appreciated against BTC over 1,000% almost in a single week. That's mad. That's crazy, man. It makes Bitcoin look like it doesn't move. It makes Bitcoin look as stable as the US dollar. That's pretty crazy, dude. I don't know much about this coin, but it is it's pretty volatile. Let's just go like this, and then go like this, and then go like this. Wouldn't surprise me if we got another third bump, and then if we just connect the lower highs, I don't know, you might get something like that. We don't exactly know, but you see these just little tiny pump and dumps. Looks like as long as you're not FOMOing in at the top, you can get some crazy moves to the upside. But yeah, that's my view. I don't really, there's not much to work with, to be completely honest with you. But hopefully you got something out of it. I don't really know how to explain something that moves like this or how to enter. Doesn't have much flow. Doesn't have much market structure. Kind of seems like something that you'd put in, leave it for 5 years and see what it does kind of thing. All right, so SNGLS. And then we're first going to look at it against USD, just because I like to understand where it currently is. Oh my god. Wow, okay. And then let's compare it with BTC now. Definitely not looking great. It did form a nice bottom here at around 65, and it's holding the previous resistance at around 130-ish as a new level of support, which is good to see. Yeah, it's a pretty key level of resistance turned to new support, so that's pretty good to see. We did get a huge rejection at the initial spike up, which isn't great, but if you look at the larger time frames, it is not really appreciating anywhere close to what you'd like to see in terms of opportunity here. You got a lot of movement before you really see any level of potential huge moves to the upside, in my personal view. We're right near the bottom. If BTC takes any nosedive, I think this is going to fall even further. If it breaks that support, you do not want to be in my personal belief. But like we can see here, broke a key level of support, retested, dropped even further, dropped another 71% compared to BTC. So you do not want to be in these situations when it's absolutely plummeting. So not super strong. Quick look at things like that are a little bit more known, well-known, I'd say. Link paired with BTC. Link has really solid relative strength compared to BTC and a lot of other altcoins. We see that compared to BTC, it is appreciating quite substantially. It's holding a very well-respected ascending zone right around here. And we are squeezing very tightly. Look at this. So if it breaks to the upside, that could be really great for Link. If it breaks to the downside, you got a little support that it could come back to right around here. And then we got another zone right around here that we would be looking for. And then a break could be at that next zone there. So we'll see where it goes in terms of relative strength. Link does look awesome. And that's the type of chart that we're looking for if we are looking to invest or trade long altcoins, is we want to see some relative strength compared to BTC, or if we're trying to decide which pair should we invest in or trade, just from a technical standpoint, it makes sense to conduct a relative strength analysis. So for example, let's say you want to get a good understanding of which pair would be better, NEO or Dash. You could do Dash USD paired with NEO USD. And it gives you an understanding of which one is better, right? If it's going up, it means that Dash is appreciating greater than NEO. If it's going down, it means that NEO is appreciating greater than Dash. So since 2020, looks like Dash is getting it's doing a little bit better, but it's basically just it's going sideways. It's not really doing much. Let's look at a smaller alt. Let's do Atom versus I don't know. Let's do BNB. And just see which one might be better. So Atom had some huge gains here, and BNB took it all back, and now we're basically where the initial move started. So really, it's just consolidating. Huge move up. Pull back all the way down, and there's not a whole lot to do at this point in time. So let's quickly go to the comments to see if anyone is looking for any alts. Nope, not yet. So if there's nothing really to do, we're going to end it really at that. Let's just look at Ethereum paired with BTC. And we got a very nice squeeze here. So if BTC breaks to the upside, I think Ethereum will break higher, which then this wedge, or this triangle, sorry, would be breaking to the upside, meaning that Ethereum is going to appreciate greater than BTC. But if BTC breaks to the downside and we get a risk-off sentiment, this is probably going to move down, meaning Ethereum is going to depreciate quicker than BTC in the short term. It doesn't mean that it's going to be forever, but we'll see where it goes. We see overall Ethereum is losing a lot of ground compared to Bitcoin. It's kind of near the lows. And if BTC does make a substantial push to the downside, we could be grabbing Ethereum back at 0.02. And if we're just taking a quick look at Ethereum USD, we could be looking at like $100, $150. So we see major lows at 75 to 100, and then 150 is a pretty important level as well. So I think if you're able to grab Ethereum for under $150, that is a great deal in my personal opinion. Obviously, you have to manage risk. You have to know what you're getting yourself into. You have to understand why you are choosing to put your capital in that asset or that investment. But just my personal opinion, not a fact, not investment advice. This is just what I like to do. I think Ethereum is a really good investment, and if you're able to get it under 150 or under 100 even, man, that is an absolute steal in my opinion in terms of accumulating for the long term. So that is the video for the day. Hopefully you were able to see the analysis, Dan Dollars 01, for the relative strength for the two pairs that you wanted us to check out. So thank you very much for watching. We really hope you enjoyed it. If you do have any questions, comments, suggestions, it'd be great if you put them in the comment section below. But yeah, we will see how it goes. Not much else to go, and yeah, hopefully everyone has a good trading week. At this point in time, definitely I think it's more of a risk off. I'm just going to talk for a little bit because markets are kind of consolidating right now. But we see in terms of, I guess if we're talking about FX, just trying to get an understanding of overall global macro sentiment. We do know that overall safe haven currencies like the US dollar and Japanese yen have been doing better recently compared to, I don't want to say AUD and New Zealand dollar because they did well during the entire move up when we had that risk on sentiment. But now we see GBP, the pound, absolutely tank. And it's weird because the euro, when they printed a lot of money, currency, it went up. The Euro USD chart exploded to the upside when they said that they're going to have more stimulus to support the EU, and it was super bullish. But then now with the GBP printing and debasing the currency, it's taking an absolute shitter and taking a nosedive. So just because economic data is positive, negative, doesn't mean that the chart's going to react the same way every single time. Fundamental news is kind of weird because like investors could be price sitting in, they could be expecting it, and it's not as bad as it is. You just got to look at a chart. It's really hard to look at some economic data that came out and say this is what's going to happen because of that data. It's just really difficult to do that. Defund RH. Not really sure, RH. Not really sure. Maybe explain to me what that is, and then I'll be able to understand a little bit more. Top 3 cryptos to hold in order, please, from pre-TV2. So this is not financial advice. This is not something that you should do just blatantly because some random person on the internet said something. But you should do your own research. You should always understand what you're putting your money into. But to answer your question, I'd say the top 3 cryptos to hold would be BTC, Ethereum, and one alt of your choice that has some level of vetting through just being in the markets and seeing price appreciation over a long period of time, meaning it's not absolutely in the shitter and it's climbing through the ranks of market cap. It depends what you're into. If you love trading on Binance and you're a fan of exchange tokens, you use it to get cheaper fees. Binance Coin, is my opinion, is a good exchange token that I think will appreciate. Relative strength is pretty solid as well compared to BTC and other alts. If you're into, for example, privacy tokens, I think Monero is a good one. It's been near the top 15 market caps for alts for a while, and in my opinion, it's probably the best privacy token. It depends on what you're looking for. Link's also a good opportunity, I think. There's a bunch, right? Neo is kind of like Ethereum in China. There's VeChain. There's a bunch of stuff, right? But I'd say BTC and Ethereum should be the primary assets to hold in a crypto portfolio, personally speaking. It's like, I don't really understand why people have so much emphasis on finding like a shitcoin on number 500 on the crypto market cap that has like 0.001% chance of actually gaining like significant price appreciation compared to everything as a lookalike like it that has gone down the shitter. When you have things like BTC, Ethereum that have unbelievable price appreciation charts, and yeah, you might not get, 100x or whatever, but like, use a derivative exchange, understand how to trade, and then you can still get those gains over time while using leverage in a managed way. And you have more liquidity. It doesn't make sense for me to look at like small, tiny cap coins, in my personal belief. So yeah, I would say those are my top three. XRP. I personally don't love XRP. I know a lot of people either absolutely love it and think it's like IMF's secret weapon and like gonna be like the new monetary system is like XRP, and like Brad Garlinghauser or whatever his last name is like literally a god. Some people are extreme XRP fans. I personally don't love it. Just looking at it from a technical standpoint, it's extremely weak in terms of relative strength. Let's look at it right now. Let's pair it with XRP BTC. And we saw Link, right? Link was really solid in terms of relative strength. Look at XRP, it's super weak. It already broke a minor level of support right here, and it's just slowly consolidating down. Like, it's really shitty. Look at XRP versus BNB. Again, BNB is absolutely dominating versus XRP. XRP, even like XMR, Monero. I guess I can't really do that. XMR, Neo. Even Neo's beating XRP. Like, I just don't understand from a technical standpoint how everyone absolutely loves XRP. What's a coin that's like not awesome but has a lot of volume? I can't really think of one. Let's just do XRP and Dash. XRP USD, XRP, Dash USD. That's how you do it. Yeah, even Dash is beating XRP. Like, there's not that many tokens. XRP USD, ADA USD. Let's look at Cardano. Same thing. Yeah, I don't know. It just doesn't make sense why everyone's super fanboying about XRP. They have a lot of partnerships. They're doing it the right way. They're going about it, going through all the hoops of the regulation process and all that. I commend them for that greatly. But in terms of the number of bids versus asks, it's super weak. And it could change. If it does change, if XRP gets more buyers and sellers and starts appreciating greater than some of these other alts, I'll be extremely interested in it. It does have times where it absolutely pumps, but overall, right now, it's not relatively strong at all. It's extremely weak compared to a lot of different alts that we analyzed. So that's my take on it. I need proof. I need validation. Do you play Roulette? I don't play video games. Will BTC go down? Should we wait for the dip? So that's a pretty difficult question. In my personal opinion, it will do what the SPX does, the S&P 500, or very similar. And in my personal view, I think the short term, there is more probability for the price to go down in the short term. There is less resistance overall going down than up in my personal view. So I think that's a short-term play. But in the long-term play, if you're not actively trading BTC and you don't really want to trade, but you still want to have exposure in BTC, I would say the best thing to do is dollar cost average. By far. If you're working at a job and don't want to put time towards trading, educating yourself, and back testing and understanding the markets, it takes a lot of time. It takes a lot of effort. It takes a lot of man hours, woman hours, whatever you are. But it's not easy. So if you are a person who just wants exposure, who is aware of the long-term outlook for BTC in their own perspective, then I would say dollar cost averaging in your favorite asset is a really good way to go about doing your investments and kind of creating a strategy for yourself, in my personal belief. Pretty hard to time the markets if you spend like 5 minutes looking at the charts a day, in my opinion. What's a good stock for today? I have no idea. I don't trade stocks. I don't like the fact that there's massive gaps. Not something I like doing at all, and I'm mainly trading in crypto, metals, FX. Not really trading indexes or anything, but they do play a pretty big role in my overall analysis. So, what about buying crypto on Revolut? I don't know what Revolut is. A better way to handle your money. Financial technology company. British financial technology company headquarters off. I don't really know what it is, to be completely honest. You got to ask yourself, if you're purchasing any type of crypto, are you able to take it off the exchange, whatever you're purchasing it, and put it on your own ledger, your wallet, whatever? You want to hold your own assets. It's like if you purchased an ounce of gold, like physically purchased an ounce of gold. Would you want to hold it and put it somewhere you know is safe? Or would you give it to your friend, your neighbor, and say, hey, I trust you. Make sure this is safe? I wouldn't. I would want to make sure it's safe by taking it in my own hands, in my own management. That's the best way that I think would be a safe way to go about doing business and investing. So that is the same thing that you're looking for in the digital form of investment. But you're not looking to, for example, buy Bitcoin on Coinbase and hold it on Coinbase for your long-term investment. If Coinbase goes down, you're screwed. It's happened before. Google Mt. Gox, Google Quadrata CX, or Quadrata CX, I think it's called, a Canadian exchange that went down. Huge devastation. These things happen. So the best way, if you're wanting to long-term hold, is buy a hardware wallet like a Ledger, Nano S, or whatever you're looking for. Buy it from the official website. Don't buy it from Amazon. Don't buy it from Craigslist. Whatever third-party platform you're using, buy it from the official website so you know it's legit. It's not used. It's not tampered with. So you have a unboxed ledger or whatever hardware or wallet, and that's the safest way to store your crypto. No, you don't have the option to move it into a wallet. Well, then you don't own your coins. You don't own your sats, my friend. That's a very risky game you're playing. On paper you have it, but let's say the company goes bankrupt. What happens, right? Are you going to demand your money, your investment? What if someone hacks it? What if someone hacks the exchange? Are you just going to demand it? They're probably not going to give it to you. It's a risky game to play if your entire crypto holdings is on an exchange, or let's say you purchase Bitcoin on Robinhood. Like, you're not going to be able to take that out and put it onto a ledger. It's a derivative, it's a contract, it's not actually purchasing the true asset. You're purchasing contracts, you're controlling paper, you're not controlling actual Satoshis. So you don't have your coins. Revolut, I believe I'm saying it right, is a pretty cool and popular banking system all over Europe. That's pretty cool. I've never heard of it. I don't live in Europe, obviously. I live in Canada, so we have our own platforms that we use, but it's interesting and really great to see that corporations and money transfer systems around the world are implementing ways to onboard new users in the crypto sphere. I think that's a great, great advancement and progression of the overall crypto market. So yeah, I think it's great. Yeah, you're right. Also, they have the option of buying real stocks, and I receive dividends. That's pretty cool. Real stocks? I don't know if there's fake stocks. I guess there is. Buy like a fake stock. But yeah, that's awesome. I think that's great. I think the ability for people now to get educated and start making their own financial choices and decisions is getting easier and easier with the advancement of the internet, with the advancement of more, I guess, I don't know how to say it. The education is being created in an easy to digest format like YouTube, where they make cartoons and like infographics and like entertaining videos that also provide immense value in education that institutional education will not provide you. Yeah, if you go get a finance or economics degree, they'll probably give you some level of education, but it's really, really unbelievable the amount of information we have in the palm of our hands. And I think the fact that people are using it is great. Don't really see much else in terms of questions. I'm just going to close some of the tabs here. And probably going to go off if no one else is asking any questions. We can go over some charts if you want. We're just going to be looking at a bunch of stuff, but that's basically the end of the Thank you very much for your answers. Yeah, no problem. We appreciate you coming down. YouTube series you recommend. What YouTube series I recommend? If you're new to investing and the overall market, I would say Mike Maloney's Hidden Secrets of Money is probably one of my favorite YouTube series I've ever watched. Start from 1 to I think there's like 9 or like 12. I don't really know. Extremely well done. If I had to pick one YouTube series that I would recommend to a friend, that would be the one. Mike Maloney's Hidden Secrets of Money. Extremely well done. And that's kind of going back to what I talked about. Like, it's really cool seeing people pour money into free education for the masses. And that's what he did. It costs a decent amount of money to get those types of infographics, unless he's doing it, which I guarantee you he's not. He has his own profession, his own skill sets that he's really good at, but he's not a graphic designer and a whatever graphic designer, I guess you can call it. So he spent a lot of money making it, and I respect that immensely because it helps so many people. So yeah, that's my one series that I would recommend to a friend if they asked. Let's just quickly look at the overall market here. It's moving up. We can just leave that. It's moving up slightly. Let's just see what BTC is doing. Probably moving up a little bit, holding that nice little support zone. And this is that little move we're getting from the S&P. Let's just drag this a little bit further, a little bit higher. So what do we see now? Let's just talk about it. I'm just going to keep this live on just because there's no real need to turn it off at this point. I'm just basically going to be doing this with or without the live. Anyway, so what do we see right now? So we were initially a little bit more bearish, and we still are, because just looking at the S&P wise, series of lower highs, lower high, lower high, creating a key resistance zone like we said, and then we see these higher lows. We saw a nice symmetrical triangle squeeze. It did break the support, and it held the previous low as a new level of resistance, and it got pushed down. It didn't hit the final target, which was created with the expansion and the size of the symmetrical triangle. So it does give us some indication that there are buyers in the market, that the fact that it didn't break this support to complete its move to the downside. But we have this new structure right here, which is a descending triangle. We could do another one here, which is respecting the larger zone. But overall, if it does break to the upside, I'm not going to be super concerned, but I will be a little bit more careful for any opportunities to the downside, because if it does start breaking resistances, we might have to shift our bias, because we saw that buyers picked it up each time. Each time buyers picked it up, right? Maybe it made a lower low. We were forming a nice wedge. I guess you can draw it kind of like that. Got this zone, and this zone right here, and then you can get that zone kind of like that, and then you got to break to the upside, breaking previous highs pretty significant at that zone, and that previous resistance turned into new support. So overall, we're going to see how it goes, but my immediate reaction is just basically to see if this zone right here is going to hold as a confluence, and if it does, I want to see it break this support zone, and I'll be looking at entries when it does break that zone on risk on assets like crypto, and I'm going to be looking at some FX pairs as well. So that's the overall. Oh, my phone just died. I guess that's when you know it's time to close the live. All right, thank you very much for watching. I really appreciate it. Until next time, have a good one, folks.